Welcome, everybody. Before we get started here, you can see on the screen we have a QR code. If you want to take a picture of it and leave a review for Real Estate B School. So Lars, as you all probably know, but I'll do it anyway, and just in case you don't, but Lars is the one that owns Real Estate B School, and I work with Real Estate B School and Annalise, who's here every week. And so if you like these calls or you've taken advantage of any of the coaching documents that we've ever linked or anything, love if you would leave a 5-star review. And that would be amazing. You can go to either reviewrebs.com or scan that QR code that Annalise has up. So today we're going to listen to the monthly market report. It's a shorter one, so we will be out of here earlier today. But as always, I just want you to think like, how could I use this information to either, number one, open up my eyes to see opportunities, or number two, give this information to my clients so they understand the opportunities. And number three, how could I use this to attract more clients to me? So it could be videos, blog, maybe you might write an email. There's a guy that I get emails from 3 times a week. He has over a 40% open rate because he's mentioned this before. And his emails and posts, actually social posts, are literally just writing. You don't hardly ever see him face to camera. And these emails are so impactful. And all it is, well, I shouldn't say all it is, but a lot of times he said how he writes his posts or emails is just whatever he's listened to or read or talked about himself. He will go back, write that really quick, and then put it out there. So, and sometimes, like even for me, I'm like, oh, what kind of content am I going to create today? Or, oh, I don't want to write an email. It could just be, okay, what did I hear? What did I read? What did I talk about? And then just put that into an email or a social post. So maybe that'll help you to think, yeah, you know what? I don't always have to create something where it's like all these cool cuts and you're like in and out and all those things. Like I'm terrible with that kind of social media. I love it. I'm terrible at it. I like his kind of easy to do social media because he doesn't have to like create it. He's just disseminating. He's the vessel between somebody's information. Like if you think of a book, right? This is 25 years, 30 years of their life, and they're giving it to you in an 6 to 8 hour read. And all you have to do is give a couple points that meant something to you. Anyway, we're going to watch this video. I will link the slides. So you guys have them as well in case you want to put any of it on social or use it however you want to. So I will put that in the chat, no worries. And then at the end, if anybody wants to share, amazing. So we'll get going here.
Welcome to the monthly market report. It is March of 2025. My name is Kate Rezebeck, and I am thrilled to be here with you today. We're going to be talking about 3 really important topics as we go into the spring market. I'm going to bring you an update on home prices. We're going to talk about what's happening with mortgage rates, and then we're going to get into some creative ways to help your buyers understand how to make home ownership a little bit more affordable. So we're going to talk about some alternative financing that you and your clients should be talking about with your lender. So we're going to go ahead and jump right in. We're going to start with home prices. What is happening with home prices? You know, people are wondering, are they going up? Are they going down? What's the deal right now? Well, I want to start with this quote from Selma Hepp at CoreLogic. She says, home prices have mostly been moving sideways starting in late summer through the end of 2024, a trend that may continue into the early months of 2025. So what do I see when I look at this? Well, first of all, home prices aren't rising exponentially anymore. And second, they're not crashing either. So that's a really good thing. Looking at moderate price appreciation right now, and they've been kind of holding pretty steady nationally. So let's take a look at this. Home price growth remains relatively flat. That's exactly what you can see in this graph going all the way back to January of 2024. Maybe some little ups and downs, but really very steady nationally throughout the last year. Now that starts to change as we look at things on a regional basis. So home price appreciation actually varies a little bit more based on your local market. So you can see in some regions a little bit more appreciation than others. This is month over month change in home prices. So we're seeing variation as we look at this locally. We always know that home prices are very localized, and it's more important than ever to kind of be that local expert for your clients. So let's also break this down on a year over year view, and let's look at some specific metros. This is a look at home price appreciation year over year for the top 20 metros in the country. So average home price appreciation about 3.9% over the past year. And what I've done is highlighted a few of the key areas where home price growth has actually been a little bit higher. So this is 5% growth in the green areas that you can see in some of the top 20 metros. Now, most of them really fall in that 3 to 4% range, but some certainly more than others. That's all depending on supply, demand, what's happening in that market. But overall, what we're starting to see, and I think this is a really good thing for you, for your clients, is that home prices are moderating. Much more normal, healthy levels of appreciation that we're seeing in the market right now. And that's really, really outstanding as we go into the spring market. If you look back over time and kind of take a look at how many shifts we've had in prices over the past few years, this is actually home price growth going all the way back to 2019. And it's changed pretty dramatically. If you look at the beginning of this graph, you can see that 2019 leading up to that kind of pandemic time, home price growth was pretty steady. It was pretty normal. And then all of a sudden there's this big bump up. We all remember that when home prices rose exponentially, but we've come off that and started to moderate much more normal, healthy levels of home price appreciation. Certainly a little bit more than what we saw pre-COVID, but definitely kind of evening out a little bit more. And of course, great news for your clients, for the market. It's the healthy signs that we've been looking for when it comes to home prices. Zillow talks about how this is impacting the market now. They say prices are expected to rise this year, although most will do so more slowly than they did last year. So that more normalized level of home prices. News for buyers who have locked in their budgets and are saving for down payments. So this is the news your buyers are looking to hear. This is what you want to be communicating right now with your clients to make sure they understand what's happening with prices. So many people stepped out of the market over the past couple of years because prices were rising, mortgage rates were going up, and they got priced out. And so now that prices are moderating a little bit more, this is the message to definitely share. And if you look at what's ahead, if you follow along with us, you've definitely seen this graph before. This is our latest home price forecast. And we look at about 20 or so different experts when it comes to home price forecasting. What is everybody saying? You can't look at just one and get the full picture. So we average them together. And when you look at what the forecasters are saying for 2025, much more moderate home price appreciation, an average of about 2.7, so maybe just under 3%. Majority of these forecasters are somewhere in that 3 to 4% range, but certainly healthier, more normal levels of home price appreciation. And that's exactly what your buyers want to hear. So what's another question that your clients want answered right now? What is ahead for mortgage rates? Well, there's a lot happening in the market right now. Everybody wants to know, when are mortgage rates coming down? What's going on? So I'm going to walk you through the latest update that we have, because as we see home prices start to moderate, we're also seeing mortgage rates starting to decline a little bit this year. So let me walk you through this. We can see that mortgage rates have come down since they peaked around 7% or so back in mid-January. We've seen over the past 6 to 8 weeks or so, mortgage rates easing a little bit. Now, there's a lot of reasons for that. We'll break that down, but we're definitely seeing a little bit of relief going into the spring market. So here's what Jessica Lautz at NAR says about mortgage rates. This is the lowest rate for the 30-year fixed mortgage rate in 2 months, marking 6 consecutive weeks of rates declines. That's what we just showed you. It results in a monthly savings of $60 on a $400,000 home, which represents a 20% decrease from when rates peaked at 7.04%. Now, she asked the question, is $60 a deal breaker for someone purchasing a home? Perhaps not. However, it could influence a buyer's financial perspective, shifting from the mid 6% range instead of 7%. Ultimately, vibes rather than data could prevail.
So what does that mean? There's a mindset shift going on right now. Mortgage rates are coming down. Average mortgage payment has gone down roughly $60 on a medium price home. So maybe that's not a deal breaker. Maybe that doesn't get somebody off the fence. However, the mindset or the feeling that people have when mortgage rates come down is definitely positive at this time. You know, going into the spring market, if people were sitting there waiting for mortgage rates to come down, this may be the signal that they've been waiting for, as they're seeing a little bit of relief. So, you know, a lot of times home purchases are based off emotion, and there's a lot of emotion when we start to move from something in the 7s to the mid 6s. So that's really exciting news, and definitely something you want to be talking to your clients about. Because let's take a look at the forecast. Right now, rates are actually declining faster than the forecast projected. So rates are projected to stabilize this year. Latest forecasts say settling in somewhere around 6.5% by the end of the year. Well, we're at 6.7. It's the first week of March, and we are recording this monthly market report. We're at about 6.7 according to Mortgage News Daily right now. So a little bit lower than what experts thought was coming. A lot of reasons for that. Things happening in the economy that we'll talk about in a moment, but starting to already beat projections. Now, I'll caveat this with it's going to be a bumpy road. Brace for volatility. We always talk about that as things change in the economy around us, and things like inflation and all those other pieces that we look at. We're going to keep track of that for you and bring you the latest updates. But for someone who's kind of looking for that relief right now, going into this home buying season, here we are in March, this could be their moment. So making sure your clients know what's happening, mission critical, and we'll continue to update the forecast for you. You know we're going to continue to bring you those latest updates and everything that's happening as forecasters reproject through the rest of the year. So still looking at that mid 6% by the end of the year, but definitely moving in a positive direction. Now, Sam Cater at Freddie Mac says the drop in mortgage rates combined with modestly improving inventory is an encouraging sign for consumers in the market to buy a home. And truthfully, every quarter point counts. So I wanted to bring this visual for you today that shows that even a small rate change can affect your buying power. Now, this is a grid that we put together to kind of give you an idea of what happens to a monthly mortgage payment when mortgage rates shift. So this is mapping out principal and interest. And so those green boxes show that if someone were, let's say for an example, looking to keep their monthly mortgage payment, principal and interest under about $2,500 a month or less, what loan amount could they qualify for at different mortgage rates? So this is illustrative. This is just an example. Of course, you always want to work with a lender to get the exact numbers, but gives your clients kind of an idea that at 7%, someone could have potentially qualified for a $380,000 loan amount. But as mortgage rates have come down to about 6.5, you're looking more at a $400,000 loan. So it can give people more buying power, or they can save more. There's different ways to look at this. But when you share numbers like this with your clients, it can help them understand what you're really talking about. Again, always working with a trusted lender to get exact amounts, but this can really help start the conversation. And as we always say, you want to have a lot of conversations to help your clients to ultimately close more deals. So let's talk about what Business Insider is saying. They're saying if inflation continues slowing this year, we could see mortgage rates go down a little bit. Weaker economic growth could also help rates fall. So, you know, there's a lot happening in the economy. And one of those things that we always say is when inflation is high, mortgage rates are high. And we've seen that over the past few years. So I want to show you what's happening with inflation right now, because we got some news in February that inflation had ticked down just last week. So what you're seeing, if you follow along with us, you've definitely seen this one before. This is the core personal consumption expenditures, or PCE, inflation rate, and it goes all the way back to January of 2020. You know, you can see that time period where inflation really rose exponentially. You can see how it's come down a little bit. And it's been pretty stable and steady, kind of what we were calling stubbornly high over the past few months. Now, it's not at that target rate that the Federal Reserve is going for yet at 2%, but the data that we got last week is that it's starting to ease a little bit more. So inflation came down. We saw mortgage rates respond. There's a lot of things happening that impact mortgage rates. And easing inflation is definitely one of those influences. Now, there's a lot of uncertainty in the market right now, too. And so what we have to also remember is that things like questions around tariffs and how is that going to impact the economy and a lot of other things happening with employment and all of those factors kind of come together when it comes to impacting mortgage rates. But if we do continue to see inflation come down, that's a positive sign for the mortgage market. We're going to continue to watch this. There's a lot of questions and a lot of unknowns right now, but we will certainly keep you posted on how this impacts rates for you and your buyers going forward. Now, let's also talk about what to expect. Joel Berner of Realtor.com says, though mortgage rates have fallen over the past several weeks and look more promising to prospective home buyers, we are far from the home finance environment of the post-pandemic home buying frenzy when rates were below 4%, and we are unlikely to return to that environment. You've heard us say this before. We're not going back to 3%, 4%. That's not in the near future, but we do expect mortgage rates to stabilize over the year. We're seeing some positive signs already, and we are certainly going to keep watching this for you so you can keep your clients in mind. Now, how do we start to help our clients make homeownership more attainable, more achievable when prices are still rising, mortgage rates are easing, but they're still high? Those two factors are definitely making affordability still a big challenge. That hasn't gone away. So one of the things we brought for you this month is some alternative financing options to explore. I'm going to break down a couple options for you. These aren't options for everybody, and there's certainly things that you should be talking to your trusted lender partners about and making sure your clients are asking their lenders questions about, because speaking with professionals and experts on what options are out there and knowing what questions to ask, that's mission critical for your clients to be able to figure out how to work through this, figure out how to make homeownership more affordable. So the two financing options we are talking about today are mortgage buydowns and adjustable rate mortgages, or ARMs. So I'm going to briefly highlight those for you. Like I said, talk to your lender about these, but let's start with mortgage buydowns. LendingTree says a mortgage buydown, also known as a mortgage rate buydown, involves paying for an upfront fee in exchange for a lower mortgage interest rate. The rate reduction can either be temporary or permanent, depending on the buydown type. So what does that mean? Well, the most popular buydown you've probably heard of is the 2-1 buydown, and that's where someone qualifies for the full payment, but for a few years, they may get a slightly lower one, and then that rate will be bought down. So over time, they could potentially refinance. This is an option to explore if you think mortgage rates are going to come down. So could be something to talk to your lender about that could help make home buying more achievable, especially in the near term for your clients. And this is definitely one that's growing in popularity. First-time home buyers are looking for mortgage rate buydowns. HomeLight says agents reported to them that 27% of first-time buyers requested mortgage rate buydowns from sellers. Like I said, this is becoming more common, and it might be something that your sellers are able to offer as they sell their home and buyers come through the process. So definitely one to explore, to find out a little bit more about, but good questions to ask. And then the second one is ARMs, or adjustable rate mortgages. And I want to share a quote with you from Lance Lambert at Resi Club that I think really helps clarify where ARMs are today, because it's a little bit different. Actually, it's a lot different than where ARMs were leading up to the housing crisis. So let's take a look at that quote. It says, ARM products today are different from many of the products issued in the mid-2000s. Before 2008, lenders often approved ARMs based on borrowers' ability to pay the initial lower interest rates. And sometimes they didn't even have to check that. Remember Ninja loans, no income, no job. Today, adjustable rate borrowers qualify based on their ability to cover the higher monthly payment, not just the lower payment. So what does this mean? You know, many years ago, you did not have to qualify. You did not have to prove you had a job or an income or anything like that to get a home loan. We're nowhere near that today. And a borrower for an ARM today has to qualify for the higher payment, not just the lower one. So another one that might be worth exploring if you think mortgage rates are going to come down, and that could help your clients. But certainly, again, worth talking with a lender about. So why do we bring all this information to you today? Well, if you think about home prices moderating, mortgage rates easing, but affordability is still tight. You know, you need to be able to help your clients think differently, to have informed decisions, to make powerful and confident decisions based on what's actually happening, and to have your guidance along the way, because they need you now more than ever. And I want to share this slide as we kind of wrap up today that I think really tells the story of what's ahead. It says a record percent of people are planning to buy a home this year. Now, 2025, 15% of people are planning to buy a home. That doesn't sound like a lot, but if you look back over the past few years, even 2020, 21, 22, that percentage is significantly higher. It's grown to the highest level we've seen in the past few years. So more people want to buy. The pent-up demand is there. The willingness is there. It's just a matter of having the right expert, the right information, and everything they need to work through this process, because it's complex, it's complicated, and they need you more than ever. And having the right conversations, getting out there and talking about this is what's going to move the needle for you, your clients, and your business. So we're going to wrap on this slide that we show you often. It's why we are here. It's because most agents know what's happening. Good agents understand what's happening. And it's only the great agents that can explain what's happening. If you can explain what's happening with prices, mortgage rates, all of those different things, you can really empower your clients to succeed. So I challenge you to use these visuals, send them in emails, text them to your clients, put them on social media, do all the things to have more conversations. The more you talk to your clients about what's happening in the market, the more you can empower them and you can help them to really break through into the spring market this year. So that's all we have for you today. Thank you so much for being with us.
All right. Is there anything that stood out to you guys that you're like, man, that is something I'm for sure going to be using or talking to my clients about?
Yeah, hi, this is Ricardo Salazar.
Hi, Ricardo.
Hey, so I thought that was super impressive. I haven't been on this call before. I don't believe, like, when I've seen these slides. I think I was impressed. Like, I know, and I apologize, but the gal that was doing like the video next to these slides, how can we do that to to record a video like that, go through these slides and just kind of like elaborate on them and then just send these to our clients? Is that what she was saying, like, for us to do? Because I think it's brilliant.
Yeah, you could either use the exact slides, go through the whole presentation. You could take pieces of it, right, and do a little video on it and send it out to your clients, whatever you want to do, either way. But I think the whole point is, which is what you're talking about, is getting that information out to your clients so they know you're the trusted advisor.
Okay, and how was that? How did she do is it only on this Zoom call that she was able to do a side-by-side, like her video elaborating on them, or was that like something that she records and sends out to her client?
So we get this video and you can subscribe to it. It's called Keeping Current Matters. And
Correct.
So she works for Keeping Current Matters. If you're wanting to know the technical side of how she does it, yes, like a Zoom or, hers, how she's doing it that looks really cool like that, where she's as big as her slides. That's like, it's called like Ecamm or OBS Studios. Like it's sort of like next level what they're using, but Zoom would work perfectly. And you could have yourself on the screen and then share the slides and go through them.
And just record it and then send it.
Yeah.
Kind of like on Loom. I have Loom. I think
Yes.
I'm thinking of Loom. So Loom would do that. Okay. So basically, so this is not like a template that you guys give to us, or that we can find like in Rebs or anything like that. This is like, you have to subscribe to Keeping Current Matters.
Yes. So we play it for you because we have a membership. So, and then I dropped the link to the slides. So I give you guys the slides. So you can subscribe. They've got so much more than just this video. It's worth it. They have local stats, they have emails you can send out, presentations, all this stuff. But if you don't want to pay for Keeping Current Matters, then you would use the slides that I dropped here in the chat and then go ahead and record your Loom, BombBomb, Zoom, whatever you want to.
Okay, yeah, I'll definitely check it out. I think going a little bit more local would probably like serve me a little bit better because the California Los Angeles market's it's a little different. I feel.
Yeah. Yeah, totally. So this is kind of the macro view. And if you want the micro view, they have that as well. Or your MLS probably puts out stats that you can kind of put in there. Annalise said Altos Research, like you can get local stats anywhere. But yes, this program is not expensive, but they give you the tools. They don't give you the template where you could like just put yourself into it, but they give you all the slides and everything like that.
Awesome. Thank you.
Yeah, you bet. Great questions. I screenshotted the one that had the year over year appreciation. I always love to see like the big metro markets and then kind of compare it to like my own market. But what I was thinking was, have you ever seen on social where you have like the polls, right? It's like a question and then the next slide would be the answer. This would be really great to do with something like appreciation or what is researchers thinking the rates are going to do, and it just helps you get more engagement and also shows that you have the information, right? And something doesn't require you to get on video, so you could take that slide and do something like that as well. I thought that was kind of cool. I like those quizzes though. I was always the one in Little Teen Magazine taking those quizzes. These are a little different.
I don't know if
Yeah,
you
go
can hear
ahead,
me.
Eric. Yeah, go ahead.
Oh, hey. Yeah, I think this is actually pretty good stuff. I'm actually on my way to a listing appointment, so I think you can use this two ways. Getting the sellers informed of current situations that are going on and how that looks for them selling their house, as there is more inventory coming on the market and more buyers are hesitant to pay, higher prices. So being able to show them, things have kind of flatlined as part of appreciation, that kind of reels them back in and saying, oh, okay, it's not just your house is saying, my house you're saying is not worth it. It's kind of, nationwide that this is happening. Because I think a lot of the times when we meet sellers, they just kind of go off like a Zillow estimate. And then, understandably, they're trying to get the best dollar they can. I think it's just like all of these facts help both buyers and sellers when it comes to, just kind of getting their mind in the right place there.
100%. I love that. Like using this at a listing appointment, again, to show that bigger view. Like, I'm not here to try to sell your house for the least amount of money. I'm here to help you understand the market so you can make the best decisions. And here's what's out there. I love that. Good share.
Stacie, I'm posting right now the last slide. A record percent of people are planning to buy a home this year. And I'm making it a question. I love your little quiz thing because I like to ask for action. Sometimes I'm saying, are you one of the 2025 buyers that bring the stats from Nerd Wallet below to life? Just
good one.
Them.
Love it. Ooh, I'm going to take your quiz. I love it. That's awesome. Good one. I love hearing how you guys are going to use it, right? Because everybody kind of has their own idea of how to use it. And we've gotten some good ones.
If I don't do it right away, I won't do it. So
same. I'll forget.
I like the simplicity of her presentation. It didn't go too far into the weeds for me.
Yeah, agreed. It was a good amount. Well, perfect. Great job, guys. Thank you for coming today and giving your full attention. I know it's hard when you're watching like a video on Zoom. So I hope you guys have a great week and come back next week with some awesome positive focus. So have a good week. We'll see you later.